Hello and welcome to Morning Trade with Moneycontrol in association with M Stock by Mirae Asset. I'm Sumaira Abdi and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries answered live during the course of the show. So keep commenting on our live feed and we'll take it up with our guest. But before we get our guest on board, let's take a look at what the global handover looks like. And it's not a pretty sight this morning. It's a second straight day of losses on Wall Street as indices sell off ahead of the May inflation data. The Dow has lost 600 points with the drop of almost 400 points coming in the last hour. Tech stocks led the sell-off with the Nasdaq giving up over 2%, as did the S&P 500. The Treasury yields have ticked up to over 3% ahead of the retail inflation data, which is due today. Should the inflation print come in lower than estimates, it will be taken as a sign that inflation may have peaked, implying that the Fed will have to be less aggressive this year. For the week so far, the Dow is lower by 1.9%, on track for its 10th down week in the last 11. The S&P 500 and Nasdaq Composite are both off by more than 2%, on track for their 9th losing week in 10. European markets have also ended sharply lower after the European Central Bank has confirmed plans to begin hiking rates from July and also ended its long-running stimulus scheme. The ECB intends to raise key interest rates by 25 basis points in the July meeting and expects further hikes going forward. The ECB has also revised inflation forecasts upwards. Annual inflation is now expected to hit 6.8% in 2022 versus estimates of 5.1% earlier. Growth forecasts were revised down significantly to 2.8% in 2022 and 2.1% in 2023. ECB President Christine Lagarde in the post-policy conference said that the central bank would ensure that inflation returns to their 2% target over the medium term. And in line with this global downbeat mood, stocks in the Asia-Pacific region too have opened lower. Also, China's inflation data has come in line with expectations. And the SGX Nifty, which provides an indication as to where the Indian market might open, is sharply lower by about over 200 points, suggesting a start around the 16,200 mark. Well, yesterday we saw the Indian market finally snap a 4-day losing streak. The Nifty closed higher, led by the likes of Reliance, IT stocks, and also a recovery in the banking names. Rupak Day, LKP Securities, joins in now. Hi, Rupak. Morning. For the Indian market, the rally actually accelerated in the last hour, right, ahead of the weekly expiry. But do you think this might come to a sudden halt today, given the weak handover that we have from the global markets?
Yeah. In fact, we are in a market where the sentiment changes every other day. So Nifty yesterday closed with a bullish engulfing pattern, and we were expecting a rally towards the 16,600. But given the global scenario, Nifty is likely to start on the lower end, and now 16,200 is going to act as support. If 16,200 is held for the day, we may see some pullback towards 16,400, 16,600 over the next week.
Okay, so let's talk about what are the stocks which will be in focus then in this volatile days of trade. Let's start with the likes of HDFC because we've seen the rate hike come through, and the transmission also looks to be happening because the lender HDFC has raised their prime lending rate on housing loans by 50 basis points from today. Technically, Rupak, how is the stock position and what do you expect how it might move in today's trade?
Technically, HDFC has a consolidation support at around 2190. So if 2190 is held for the near term, the stock may move upward towards 2350 over the short term.
Okay. The other set of stocks is now from the auto pack. Now let's talk about Bajaj Auto in particular. Over here, the fundamental news, there are two pieces of news here. One is that the auto major will consider a buyback on the 14th of June. And second is that they will be launching their new electric vehicle factory in Pune today. Both pieces of news investors will have to work with. But Rupak, technically, what's your recommendation on the stock?
The technicals of Bajaj Auto is looking a bit positive, there was a consolidation and then there was a rally in the latest candle on the daily chart. So we are expecting a rally towards 4,000 over the short term, whereas on the lower end, 38 100 is going to act as crucial support on sustained basis.
Okay. IIFL Finance is another stock which is likely to be in the news today. The news over here is that Abu Dhabi's ADIA will be buying 20% stake in IIFL Home Finance for upwards of 2,000 crores. Technically, how does the stock look positioned?
Currently, the stock is in consolidation phase after crossing above the previous consolidation high, which was at 320. Now it is trading within a range of 340 and 320. 320 is going to act as a support. If not broken, we will be seeing the stock is moving towards once again to 340. Then above 340, the stock can move towards 370 over the short term.
Okay. Another stock which looks, positive in the light of the news flow is Dr. Reddy's, because one of their arms is expected to get an upfront milestone payment for their cancer drug. So fundamentally, that's a positive news. But Rupak is the expert. Rupak, how might the stock move from here?
Yeah, the stock got the support on the lower end at around 4,100. Now, going forward, if 4,100 is held, then the stock can move up towards 4,700. Immediate resistance is seen at around 4,450.
Okay. Another set of stocks, by the way, which will be in focus today is, the gas producers and the city gas distribution companies. Now, the news is that the U.S. natural gas prices have surged to $9 per MMBTU. Now, this is a recovery that we are seeing in the natural gas prices, so which is a positive for the gas producers, but a negative for the city gas distribution companies. Rupak, on both sets of stocks, what is your take?
If I talk about MGL, the stock has given a falling trend line breakout. Now, over the short term, the stock needs to move beyond 780 to move higher towards 860 kind of levels. On the lower end, the support is there at 750. If 750 is held, then the positive momentum is likely to continue in the stock.
Okay. Rupak, we've got live queries coming in now from our viewers, so let's start taking them up. Joshua wants to know your view on NTPC and Power Grid.
The chart of NTPC is showing that the stock is in consolidation phase after a pullback from the support. The stock is currently consolidating, and on the higher end, 160 to be cleared to move up higher towards 170 kind of level. So, and the support is being witnessed at 153.
Okay. Kamal, Power Grid, did you say also?
Yeah. Power Grid is trading near its support of 220. So the stock is likely to move up higher over the near term. On the higher end, immediate resistance is being witnessed at 227. If 227 is broken, then the next target should be 237.
Okay. Kamalaja R wants to know your view on Prince Pipes.
The stock is in downward trend, like lower top, lower bottom formation is there on the daily chart. Now, the trend may reverse once the stock moves above 620 in the near term. So above 620, the stock can move up towards 640, then 670 level is will be open. And on the lower end, the support is there at 595. If the stock falls below 595, there will be resumption of downwards correction.
Okay, Shubham Srivastav is asking for your take on LIC. I mean, do you have enough data on that?
Yeah. The stock is likely to remain weak as long as it is trading below 750. Above 750, the stock may see some recovery towards 800. And then above 800, the stock may recover fully and move up towards new high.
Okay. Rupak, we'll come back to you in just a bit. There are more queries coming in from our viewers, but we'll take that up in just moments from now. But for now, let's focus on the other side of this market volatility, which is the impact on consumers like you and me. Where do we invest? And what is the strategy really for investors? Well, the latest mutual fund flows data shows an increase in flows into equity funds to over 17,600 crores, a rise of nearly 2,000 crores over the previous month. All other categories too, like hybrids and passives, have done well. As expected, the debt funds have seen an outflow, perhaps as investors digest the recent rate hikes that have come through. Swarup Mohanty of Mirae Asset Investment Managers joins in to make sense of all of this. Hi, Swarup. Good morning. Thanks very much for joining in. And, in the absence of NFOs, because they're currently not being allowed, equity flows seem to be holding up quite well, right? Despite the volatile markets and the recent issues that we have seen for the MF industry. What's behind this inflow?
Yeah, good morning, Sumaira. Isn't that so good to see? As people start understanding the asset class, their behavior tends to change. And we are seeing that happening. I mean, clearly 6 months ago, the NFOs were the reason why flows were there in the market. But today, nobody can criticize the investor. And they're seeing the value in the market, staying put in the market, and not only staying put through the SIP route, but are adding to their existing money. And that's just acknowledgement of the asset class called equity. And understanding that staying put and staying for the long term only augurs well for their investment return. And so good to see the inflows last month. And I would definitely believe this is here to stay.
Okay, so perhaps the investors are maturing and not satisfied with just catching the tail end of the rally, and they want to stay through and through. Okay, on the market itself, what is your house view? Where are markets headed from here? And therefore, what category of funds might do well?
I think we've been having this view since COVID, and the war sort of enhanced that view, is that post-COVID, we've been carrying this basic view that you cannot take away the underlying damage or impact that COVID will bring on certain companies. So hence, there was this big advantage to large companies, and not only large companies, but large automated companies. So we had a flight to safety, and we're mostly in the large cap space. But if you see the last 2-3 months and what can unfold in the next 3 months, apart from being some of the thematics looking very interesting, like the banking, we do believe that this could be a possibility of the mid caps coming back. We'd flagged off almost put a hard stop to our mid cap inflows a year and a half ago to be exact. And if you look at the data at that day, the trailing mid cap mid-cap Nifty 100 TRI was around 42% for one year. Somebody would have invested then, 1 year return on March 1st would have been, say, 20%, but that today would lie at around between 10 and 11%. And that's something which happens when you look at near-term returns when you invest. In fact, it's always the other way around. If the near-term return of a category which you like is weak, that's the time to start buying. And we feel that can happen to mid-caps in the next 2-3 months, but watch out for that. As of now, the macros are not in the favor of India, not in the favor of the world. So stick to large caps is our view.
Okay. I was just going to ask that because since as a fund house, you're sticking to large caps, why would an investor want to move to a thematic fund at these times, right? So for retail investors, the choice is large caps. I take your point entirely. But then, where do we get alpha from?
Yeah, that's a very good question, Sumaira, because at the end of the day, the portfolio return is ultimately what matters to the investors. You can make money by going down the capitalization that is large, mid, and small. But as you go down, the risk of the portfolio increases, and that's why you should have a core portfolio and along that a satellite portfolio. You can do it in two ways. One, by going down the market cap as we spoke, or we look at opportunities in thematics like, 4 years ago, the healthcare looked a very good buy. We feel the same stands for the banking theme as such. And banking is not just, it's just not a sector. If you look at, say, when I started my career in the early 2000s, it was just bank. Then it was bank and NBFC. Then it became bank, NBFC Financials. Today it is bank, NBFC Financials, and you have the fintechs. So these are not just isolated sectors. These are broad portfolios which can be very diversified. And that's why we look at that kind of opportunities to enhance or give that little bit of a kicker to bring that so-called alpha that you're talking about. Or you can look at good fund managers who can then go out and pick good stocks and give you that alpha. And these markets actually enable fund managers because these are volatile markets, not efficient markets. And in this inefficiency lies this opportunity to go out and pick stocks which were very expensive earlier. I mean, Sumaira, at the end of the day, a fund manager aspires to buy a good company at a good price. The prices are looking good. So if you want to enable your portfolio to do better, give your existing fund managers more money, because the fund managers can do a lot in these markets, and either average on the stocks which they had bought earlier, or buy stocks which they had probably missed out because the prices were very high. The opportunities are there in the market. It's up to the investors to take it from here on.
Okay. Swarup, sorry, one question on the point that you're making about how this is a good time to enable an active fund manager, right? Therefore, what explains the month after month of 10,000 crore plus of money coming into passive funds? I mean, you know, clearly, I mean, this is not the market for a passive fund, or is there enough money to go around?
Yeah, Sumaira, this is the question of the time, because, you know, there are two types of investors emerging. And as an asset manufacturer, it's so good to see both these sides emerging, because it's not either or. As we see, as you say rightly, last month was a good flow for actives as well as a good flow for passives on the equity side. But on the index side, you have to notice that a lot of the money that has come in could be the debt index, which is getting locked in at some good yields, which is for investors. But, you know, there are two types of investors. One who look at alpha, and then they come to active managers, and the business of active managers is to give returns above the benchmark. And in that process, there is also the risk of underperformance. But there is a second set which is developing, which is saying that in this pursuit of alpha, why will I lose the beta? The beta is the return of the market. And that seems to be growing. And I would believe a new investor should first come in there, look, understand the market, understand the nuances of the volatility of the market, and then graduate upwards. And that is something which is unfolding, which is two different sides of the story. It's not an active investor shifting there or anything. Some might, because of some of the ideas there. But we will see this unfolding parallelly together, and that's the beauty of the Indian market at this moment.
Okay, there's enough room for everyone to grow. Okay, one final question, because, you know, global markets are also seeing increased amounts of volatility, right? And this would have been an opportune time, therefore, to be also lapping up foreign stocks, right? Because they're available very cheap. But the limit that the Indian mutual fund industry had to invest overseas has dried up, right? I mean, we have already topped that. Fresh limit has not yet, or the limit has not yet been enhanced by the RBI, SEBI. Do you think this money, which should have gone to, you know, these foreign-focused funds, is now being channeled to direct stocks via the NSE IFSC, which is, you know, the exchange where you can buy US stocks directly?
Yes, Sumaira, I think it's a little unfortunate that at this moment, as fund houses, we are not allowed to take investors' money through the global funds route. The valuations look good, but if some investor is not able to buy it through the fund route and is able to buy it directly, then one should, I feel. You know, there is no reason why one should not participate in global markets. And the markets, as you rightly put, are being valued very well. I mean, probably at their all-time low in over a decade. And these are good opportunities. From our side, the sentiment that we are getting is the investors, after going through a 1 year probably wipeout of their returns, just ask us one question: when can we buy? Just shows the shift in the risk profile of these investors. Typically, traditionally, 5 or 10 years ago, we would be told that, you know, our returns are gone. Why did you launch a fund? But that is not what is happening. People understand why this has happened, and there's a reason why this has happened. And so good to see that investors understanding the situation and asking us this one question: when are you opening? But in the absence of that, if they are able to pick these great stocks directly, I would definitely advocate that. Why not?
Okay, Swarup, that's a very mature view. Thank you very much for joining in. You have a good day.
Thank you. Thank you so much, Mirae.
All right. With that, let's get back to addressing the live queries which have been coming in from our viewers with Rupak Day of LKP Securities. Hi, Rupak. The first query comes in from Sujan Nayak. He wants to know what's your take on Praj Industries.
The stock is after a downward consolidation, the stock is moving upward. Now on the higher end, there is a resistance at 340. Once the stock moves beyond 340, it is going to go towards 360 over the short term. Whereas on the lower end, there is a resistance, there is a support at 325. Below 325, the stock may lose its current momentum.
Okay, Asian Paints is the next stock on our radar. Aman Singh Rathore wants your take on it.
I'm sorry.
Asian Paints.
The stock name is?
Asian Paints.
I did not hear the stock name.
Rupak, Asian Paints.
Can you repeat?
Asian Paints.
No, your sound is not coming.
Okay, I think we're not able to connect with Rupak, so we'll just try and fix that audio for now. But basically, this is what things look the way the market is positioned for today. There could be some volatility in store, which is exactly what our experts have been telling us, because the mother market, which is the US market, has lost for the second day. In fact, in the last 11 months, last 11 weeks, the Dow is down for 10 of those weeks. The other two big indices, S&P 500 and Nasdaq, are down for 9 out of the last 10 weeks. So naturally, we'll feel some rub-off on our own market as well. Rupak Day is back with us. Rupak, are you able to hear me clearly now?
Yeah, it's clear
okay.
now.
So the stock is Asian Paints.
Yeah. Yeah, the stock has come down from 32.50 to all the way down towards 26.50. Now the stock has formed a bullish reversal pattern on the daily chart and is expected to move up higher. On the higher rate, however, there is a resistance at 2700. The stock needs to move beyond 2700 to witness a recovery towards 2900 over the short term. Whereas on the lower end, support will be there at 2650.
Okay. Tata Power is our next stock, and that's a query sent in by Narendra Solanki. Rupak? Okay, I think we're having tough times connecting with Rupak Day this morning. So guys, unfortunately, we would have loved to answer all your stock queries, but, technological issues, which we just can't avoid. So may I request you to join us again on Monday morning and send in your stock queries. By the way, let me just read out the stock calls that Rupak is giving out this morning. He has 3 buy calls. The first is on Tatacom, where he has a target of 1,010 with a stop loss to be placed at 909. Second is a buy call on Coromandel. Here the target is 1,000 and a stop loss to be placed at 914. And the final buy call is on NOSIL with a target of 300 and a stop loss at 258. With that, we're going to wind up on this edition of Morning Trade. Do stay tuned. Markets with Santo and CJ comes up next.